The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 3rd of February, a COVID day. I had to go to New York Friday, flew in, flew out, came back, and Sunday diagnosed with COVID. What can I say? Second time. Anyway, do the best I can. 48,928 on the Dow, down 616. Remember the Chapman methodology. The idea is to try to identify the lowest low, count the waves going up. We caught the bottom exactly right there at that 41,844 level, aggressively long. And I was taking little bits off. And on Friday, I said, I'm kind of nervous about this. And we're going to take something off the position, and that was probably the high tick. Dow hit 45,054. The high back on the 4th of December was 45,073. So I said, peak D's, where we invariably consider going short the Dow. It can go a little higher, but D's where you start to do the analysis. That's what we're waiting for. Well, we've got the peak D today, except we've gone from 45,054 down to the current price of 43,956. So that's a lot of points that I've wasted, because it would have been nice on Friday to at least start the position in a short position, but we didn't. Well, we are now, but it's a little late in terms of the best price action that you can get. The other thing that we look for always in the Chapman methodology is within the patterns, and I mentioned this when I did my overview video for subscribers to my opening call. I do one every Friday or Saturday. Overview for the previous week, going into the next week, what we're looking at, longs and shorts, etc. And I said the pattern that we look at very often is the dreaded H, where if you come down and retest the left side low, if you hold it and then start moving up, that's a successful test. If you break it, that's an unsuccessful test. Well, it's the same thing in the reverse Y pattern. Straight up, make a cup formation or a V-shaped formation. How you take out the left side high is very important, because otherwise you're going to have a double top just as you got a double bottom at there. Well, look at this. The daily has made that U-shaped pattern, and we've made some kind of a double top. That's very short term, right? The weekly chart has done the same thing, and it did not go to a D, G/C after the instant restart. Didn't go to a D, but it got very close. So this is going to be something we have to monitor very closely. And what I said was the 9-period moving average, this 9-period moving average above the 14-period moving average, to get that green line to go under the 14-period moving average, you'd probably have to see the Dow at about 43,500. 43,000, probably even less, 43,200. It could even be lower than that. So this is a very strong technical indicator. It's one of the reasons why I said the only way I can see a smash to the downside is if there's some economic news. It's something that is pervasive, so that it isn't just one day. What I said to subscribers this morning is that most of the sell-offs we've had have been one-offs. It depends on how you look at it, but the deep seek was like a one day down, and the next thing we go up. Now, what's really important about this is that the volatility index, the VIX, coming off an all-time high, or just about an all-time high, certainly in the Dow and very close to the S&P. If this VIX index continues straight up, that's going to be very important, because it's going to say, even though you've got a sharp VIX move, volatility index move, at this particular time, and I even wrote in here a little while ago, I said, okay, the next series of highs in the VIX are probably going to be not interest rate sensitive or anything to do with that. It's going to be tariffs. So if this high that was made at 22.70 something, 22.51, I should put that in, 22.51 right here. On the 22.51, that was just about, let's see, that was on the 27th, right? Was that the deep seek? I think it was. And then you pull back. So this one here, if it's going to be a sustained move to the downside, and everything that I'm looking at right now, especially since so many, I mentioned this all of last week as we were going to the end of the week. Now, I'm so sorry I couldn't have been here on Friday because I was going to say, when my show started at 10, I was no matter what, I didn't know because I sent out my newsletter at about 5:30 in the morning. Well, maybe it was earlier than that. Most importantly, it seemed to me that everything I was looking at suggested that we could see maybe a pop-up, but that could be the high of the day. I didn't know whether it would hit the previous high. It didn't matter. It seemed to me that we were getting kind of overbought on a purely technical basis. But to think that we would suddenly go from that level down 1,000 points, that's really something. So now, what I'm looking at for the VIX, the volatility index, you see this weekly chart, you see this kind of, it's really a rectangle, but it's in a trading band. Just been kind of stuck in a range, and the range has been between, say, 11 or 12, and maybe the 20 area, just kind of stuck there, 22 area, I should say. But all of a sudden, you're making a kind of a bull formation, and this is the start of the week, so that doesn't mean anything. But what it does say is that you see this L right here? That means the volatility index 914 has gone positive. The day's young. It could change by the end of the day. And the weekly chart is turning, but we're not even an hour into the first session of the week. I'm just saying that we've got to be careful because this could be a sustained move. So unless and I don't see how the Trump administration is going to come out in the next couple of days and say, oh yeah, all right, we're all done. We've discussed it and there's going to be a compromise here and a compromise there. No, I think that, to me, tariffs, the increase is there. Not only that, when you're talking about tariffs, for the first administration, Trump administration, you had tariffs, but in a sense it was a little bit, I think every president has tariffs in one way or the other, but this was a little different. It was a little different in the sense that there was a lot of unknowns. China by now has figured it all out. Many of the other countries are starting to figure it out. So they're talking about retaliation. That's different. So I think that this could become a little bit more serious. Maybe not a little bit, could be quite serious because the players now are conversant. They've been there before. So with that said, let's just go back to our story right here. Then as we go to the break, I'll go through all the other different parts of the indices. We're looking at the Dow down 588 at 43,952. I'll be right back. Basil Chapman, COVID Chapman.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, folks, we're back, and we're looking at Dow's now down 605. So I want you to go through a couple of things here, just to kind of give a sense of how broad this decline is, and when we're looking at the SMHs. And remember, for a long time, I've been saying the semiconductors look to me like they are stuck. And at the moment they start to break the 230 level in the weekly chart, that's going to be a problem, because that would be an arching over and suggesting it could go down even further. So they're down at 236 right now, minus 758. If you look at NVIDIA, I've been very skeptical about NVIDIA for a while. 153 with 13 was the high back in January. And now it's a peak F in the weekly chart. Really sharp move down, and for the very first time, in fact, for the very first time since, good grief, unbelievable, since December of 2022, the 2nd of December, here comes a sneeze, December, when it was trading in the 17s, that green 9-period moving average, in fact, let me show you something very interesting here. Let me go to this chart right here. Okay, right there. Now let me go to, is it this one? Yes, this is the one. And have a look at this. Click, come on, here we go. Okay, there you are. Have a look at this. No, that's not it. Oh, that's what I was talking about the other day. No, not that one. Let's go to this one here. I think it's this one. Okay. Yeah, here we go. Click, click, click. Cancel. And we'll go to this one here. There we go. Look at this. There we go. So this is the this is NVIDIA, NVDA. And we're looking at a weekly chart. There we go, weekly chart. Have a look at this. From that moment there, that was, what did I say, December of 2022, December the week of the 2nd. Green, 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 green. Even that sharp pullback, still green. Very sharp pullback, still green. And finally, NVIDIA goes, well, the week has just begun, but this is pink for the very first time. Isn't that incredible? That goes from the 17 level to where are we right now? I can barely read it because it's red. 114. Isn't that something, huh? One technical indicator. Look, all the others. So I know a lot of people use the MACD, the moving average convergence divergence. And look what would have happened. Look at that divergence. From there, the MACD was going down sharply. Look at the stochastic, like a warning, right? And yet the 9-period moving average kept one in, if you were in NVIDIA, right through until right now. Excuse me. Yeah. So that's just not a good indication at all, because it says that everything that was working in NVIDIA's favor has now seen a trend change, a tidal change. And that tidal change says now you've got to be very careful. And since NVIDIA was, for a long, long time, has been the leader in the semiconductors, that says that leadership role has been supplanted by maybe others, we don't know. But either way, it's a sharp change in the modus operandi. So, all right, so that's NVIDIA. But look at this, Intel, the weakest of the weak. It's still down there in the 19s. And, you know, MU, and this is one of the leaders for quite a while. This is Micron, screams up to about 158. That was back in, I think it was maybe June or so. And now it's trading at 90.10. So this is a very interesting market because you've got a really big range of securities that are starting to pull back very sharply. Now, of course, with the tariffs, General Motors, sneeze, here we go. Excuse you, it's me. I hope I'm not giving anyone COVID. So minus 150 at 47.92. This is General Motors. And there was a period where it looked like they were doing a lot of things right. In fact, they stuck to more of their automobiles that were not EVs, and they just had the regular engines, and it kind of helped them. And all of a sudden, they're getting slammed. So this is going to be a very difficult period right now. But at the same time, you've got to know that we are being whipsawed by the uncertainty that is part of this administration's modus operandi. Although, in a certain way, we do know what they were going to do, but we don't really know when it's going to end or how it follows through. Look at this. You've just seen 59.50 alone. Look at the cluster of Chapman automated support levels. Here, I was watching that, but then I thought, oh, I'm doing the show. I can't really do anything. Look at that tremendous 1, 2, 3, 4, 5, 6, 7. 7 automated support levels from 59.56 down to 59.49. And now we've just had a spike. What is this? Some news or something going on? What a big move. We've gone from 59.50 to 6,002 in the space of 1, 2, 3, 4, 5 minutes. And that's kind of what we expected. We had spoken about this for some time, saying this is going to be, February should be a very volatile month. And I'm anticipating, and we'll see if it's going to come about, that we have a high made somewhere in this late January, maybe early February period, and then we start to make lower highs and lower lows. But most importantly, the highs are limited. There's a cap on the upside, but not really a cap on the downside. So if that's the case, it's going to be very selective. And we'll see in the next, between today, tomorrow into Wednesday, we'll see who are the survivors. Are we looking at what? Let's talk about that right now. So I just wanted to do a couple of things. So now we've got something very different. We've got Tesla, which is down 21 at 382. So I mentioned the other day, we were talking about it, and some people had mentioned different short positions. I said, no, I wanted it for subscribers, but there's always news, and you never know what's going to happen with the news. So being short, you got to be very careful. But now we're looking at something very different, because I suspect that Tesla is going to be impacted by Musk, in the sense that there are going to be people now that say, I would buy Tesla. I just don't really want to buy a Tesla. I'm fed up with whatever it is. So this is going to be something that might impact the stock itself in terms of sales. That's all I'm saying. That it's a possibility. So I'll be back in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
We're back. So Dan asked about LGO. LGO has something to do with batteries. They have the what's needed is A, B, C, D. This has gone to a leg D just over the 200 period moving average. It's at $1.91 right now. It was at $2 just a moment ago. Yeah, this is something that you do your homework, and I think if you're interested in it, this is something you can buy and hold. Realizing that it has a wide range and that it could pull back quite sharply. But if it's in an area of batteries that is really needed, I think it's got a good sense of prospects, right? So that says to me that the 220 level should be a target over the next week or two. But I would also say that it really needs to hold 160. If it goes under 160, it'll be longer to get to that level. Okay, another question is, let me just do this. I want you to give a broad range of what I'm looking at here. So look, the Bitcoin, I had said a couple of weeks ago, I said, I think Bitcoin is running out of steam. It might not fail, but it's kind of in a range. And wow, look at that range this morning. I remember last night looking at it was down 8,000 something or other. Now it's only down 3,395 at 98,700. But this morning, it actually hit 91,455. 91,000. It was at 119,945 just 2 weeks ago. So I'm looking at this and saying, the volatility is going to be part and parcel of what we're looking at. The other thing I discussed earlier when we started January, I said there's a really good chance that we're going to see a extremely volatile market, the kind of market that represents what we're seeing in the weather forecasts, in the whole atmospheric side of things, where there's a book that I read back, it was called The Wave. I'm just trying to remember her name right now. I should remember it. This is just a simple name. Anyway, The Wave. And this woman was a reporter, and she was interested in the sciences, and she got involved with people that were doing she got involved because of tsunamis and things like that. She got involved with the big wave surfers, all the famous names that you know of, and she went with them wherever they went, and she followed them, and it was an incredible book. And the book came out. I read it. I mentioned it here in the show. I said, "Oh, what a fabulous book!" And the conclusion was that, and this was like 10 years ago, maybe 8, 9 years. The conclusion was that we will have everything that we're looking at will have greater impact. The waves, the tsunamis, everything will be bigger, and maybe not as frequent, but much bigger. And that book came out, and it was within like 2 months or 3 months before that the Japanese earthquake. It was just amazing how that worked. That was a tsunami. So with that said, I think we're going to see something like we're going to have a kind of a tsunami year, that we're going to see a lot of volatility. It might even turn out, at least for the next 6 months, that we stay in a rather broad trading range. Maybe make lower lows, but at the same time, just a very broad trading range. And that makes it really difficult. This is not, it could become tough for buy and hold situations. But in the meantime, we have certain areas that are working well. So as I said, Bitcoin has come back strongly from the low today in the 91,000 area. Here it is at 99,050. I mean, that's a big move. So we remain long our IBIT. This is the iShares Bitcoin, taking a little bit off, but looking at it, I still think it's a pretty good deal. That also means that Robert Hood, is trading right now. It's come back from the low of the day, which is 48.08. And we're trading at 51.34. And one of the reasons why I haven't done much at all since our buy in the 16s is that within Robinhood, I think it's part of the trade of gold and Bitcoin. And I just don't see any reason why this one shouldn't be a really big winner, even in 2025. But it could be quite volatile. Meantime, it's up near the all-time highs, not all-time highs. So the all-time high was, in fact, 85 round number high back in August of 2021. It went all the way down to $6.81 in June of 2022. So, okay. So you can see I'm trying to give myself a sense of overall spectrum. And look, here's the SLX. That's the steel sector. So you got tariffs, you got all this going on. Well, they kind of stuck. Peak A, I had this done, and then I think I had to shut down suddenly. So I've lost some of those notations. I'll just take a second. A, B, and there's C. All right. So this, for the general economy to really get going in 2025, I really would like to see the steel stocks start to come on a little bit stronger. They're really looking quite poor. And this is the this SLX is the Van Eck Vector Steel ETF. So that's steel. If you go to now, I had also mentioned that what I was looking at about 2 weeks ago, I was saying commodities seem to be doing well. Look, the DBA, which is what we've had long forever. This is the DB Agricultural Fund, which also has quite a bit in coffee, is holding really well. That is, it's at 27.77, up 17 cents. But if you go to the DBC, this is a little bit different. So I'm watching this one closely because this is the DB Commodity Index, and that it has crude, heating oil, gas, natural gas, gold, silver, aluminum, zinc, copper, corn, wheat, soybeans, sugar. It's a real mix. This one is kind of stalled over here. I'd said that I was considering going along, and then I thought, no, it's not doing as well as it should. But if you look at platinum had a really big move to the upside just recently. Stalling today is down 41 to 1,002. But this says to me, you got to keep a lookout in all these different sectors because platinum, palladium, here's palladium. Palladium's holding very nicely. It's at 91.78, down 65 cents today, right on the 200-period moving average. This is the Aberdeen Palladium ETF. So I'm going to be watching these commodities. It seems to me that there's a chance. Let's just see what wheat's doing right here. Wheat has had a big move up. It's at the lows of the year, but it's 528-ish area was the low, and now it's at 567. This is soybean as we go to the break. Soybeans holding quite well, and corn is going to EFG. So it's pulling back from PG, right at the 200-period moving average in the week here. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I'd like to thank Fletch in the Den for posting this. Breaking. Mexico president just said the following after meeting with President Trump this morning. The conversation was productive. Mexico will deploy 10,000 National Guards immediately to the border to avoid drug trafficking. Tariffs are now paused for a month. Isn't that interesting, huh? So here we are. That you see the cluster formation that we were talking about just a moment ago, in the 1 minute chart of the E-mini. Look where we've gone. We've gone from 5950 to 6,029. I mean that is it. Let me just put this up here because this shows you. Look at this. So we've filled a chunk of the gap down from overnight, from the open last night. Isn't that impressive? Okay, so that's that. Now let's just go and see where the Dow is right now. The Dow is only down 106. Is that what a market, huh? So one of the reasons why I didn't want to do anything too fancy other than to have a position because we still have our 3 times long position in the Dow. So we've got a 1-to-1 short in the Dow through the DOG. And the only reason it's more like insurance because we missed the exact top, which should have been Friday, where I should have said, hey, if you're taking off some right here, we should also consider a leg dip. Now, in the Chapman methodology, we like to get Ds, and Ds, many times, a lot of things happen at Ds. You can have a continuation pattern or you get your sharpest pullback. But I needed to see that there was a peak D before I did anything else. I didn't want to do it on leg D because Ds can actually continue for a little while. So with that said, now what we're looking at is I don't know if we'll do it by the end of the day, but isn't it remarkable that you can go down all the way to the 43,879 level, and here you are trading 43,879. Yeah, 700-800 points above that, and here we are. And that's the whole thing about this particular phase. In the context of sectors, I think there's still a problem. I think that the SMHs have a problem. Yeah, they've come back very nicely, but They haven't broken down to the 230 level. So that's what I'm saying, that within the context of sector rotation, we'll see within another 2 days or so just exactly which areas are starting to show the kind of support that says, you know what, we are survivors. And which are the sectors that are saying, we have a real problem. So the survivors right now, we've got gold up huge, gold up 16, hitting an all-time high. I don't know if that's going to stay like that, but it's really very impressive because in the rectangle formation, we went from the peak E in the gold. This is the gold continuous contract, and we are still long gold via the physical gold. 28.53 was the high. The week of the first week of November comes all the way down to the 25.92 level. The third week of November, and then it starts peak A, peak B, and the rule of thumb is that in this particular pattern, very often you can go to a D just underneath the previous major high, right on or just above, but this is still only a leg C. So, did the voice crack there? So this is very impressive, leg D in the monthly chart. Look at silver, SI, look at that, silver is not doing anywhere close to as well. 32.17 down 0.08, struggling. Let's go to high-grade copper. High-grade copper, more international, is unchanged right now at 4.28. At that 200-period moving average right there has been just like a magnet. You go above it, and you come back and touch it. You go below it, you come back and touch it. And that's exactly what's happening right now. So that's going to be very important to monitor. The other thing that I want you to look at here is, let's just do this. So we've got Apple. Apple plunged earlier from the Friday high in the 246-ish area, comes all the way down to today's low of 226.63. Now it's in the middle of the range. It's at 228.90. So that's just saying Apple has got a bit of a problem. It's been stuck in this range and starting to really struggle to get back to the all-time high of the 260.10 level of the 19th of December. It's not breaking down. The monthly chart is still pretty good, but it's really close to seeing the 9-period moving average to a negative. Let's go to Amazon. Amazon right now is trading down $1.17. Hey, that's not bad, at 236.08. Now, the 9-period moving average is still very strong. And this is what I was saying about the Dow. One of the reasons why I said I don't think that the Dow is going to crack unless it's just a whole bunch of economic news. Just it has to be sort of devastating to get down to get that 9-period moving average, which is so positive right now. Even at this moment, is positive. To get it negative. So that's something. But look, Apple's the same thing. Look how strong that 9-period moving Amazon is. The 9-period moving average is over the 14. Not that it can't pull back. I'm just saying for it to go, this green line, to go negative, you'd have to see Amazon down to 225 level. Sorry for those little squeaks in my voice. I'm just dealing with COVID. That's just the way it is. Second time I'm having COVID. I didn't expect to get it. But when you travel, I guess something happens. Let's go to Meta. Meta is trading up 5.50 at 694.55 after dipping very sharply down to the 675 level. And it made a peak D all-time high 3 sessions ago. There was a G/C in the weekly chart and a D in the monthly chart. Meta platforms are still like Facebook. I don't know. I mean, really, formally. Oh, did I just spell that wrong? I certainly did. So let me just 4 milli there. Okay. So doing very nicely. Let's go to Goog. Goog right now is trading. Alphabet is search engine up for legs F in the monthly, leg E in the weekly chart, leg D made a peak D so far in the daily chart. It's at 203.92, down $1.69. Hey, that's not bad at all. So Netflix, let's just do that. Netflix is trading up $1.96 at 978, up 2.21. And let's go to Microsoft. Microsoft is trading down 2.33 at 412.83. Now, it came out with earnings. It wasn't so much the earnings, it was the outlook. It was certain parts of Microsoft's earnings statement that were disappointing. So it's gone below the last low, that trough D, back around the 13th or so of January. And today's low is 408.66, and now it's trading at 413, up a little bit from the low. This doesn't look too great. I'll be right back. Basil Chapman, Tiger Technicians Hour, and the Dow is down 141. This is amazing. And S&P down 4.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. Just as we're going to wrap up, hopefully my voice will last right through this last section here. There are a couple of things that are very important right now. Do you remember we were talking about the VIX index, the volatility index? So look at this. It hit 20.42. It opened at 20.36, went slightly higher to 20.42. It's trading now at 18.09. I suspect that if and when the VIX starts to trade over 2251. That was the high that was made on the 27th or so of January. That was the deep-seek high. I suspect that that's when the market will start to hold the downside moves. At this particular point, it's really impressive that the Dow came back, but this is all news that is transitory at the moment, but it could become a little bit more permanent by Wednesday, I think we'll know a lot more about what's worked. I mean, if you've got the bully pulpit and you're able to use it and use it effectively, that's going to be very important. Once people have got your game, you don't know how they're going to act. So now with Mexico, if that was the demand and it's being kind of met mostly, then I think we can get a relaxation there. So I don't want to get too carried away. All I'm saying is that we've got stops in place for us, for subscribers. If it gets taken out, some with a slight profit, some without, some we've had really good gains. I don't want to get out of some of these things just yet because the gains have been terrific, and we've got a little room. We've taken a little bit off on the way up. That's the way I like to do things. You've got to cash in on to get benefits from your work, your hard work, and your hard money that you've earned. So I think that's very important. So with that said, how we close today is going to be very important. I don't think the story's over yet, and it's going to create this continuing volatility, and that's going to be the story of the day. Stay tuned for Steve Rhodes, and I hope we'll be back tomorrow getting over the